Welcome to Explain the Charts, where we dive deep into the world of technical analysis and help you make informed trading decisions. Today, October 10th, 2024, we're focusing on NZDUSD, the New Zealand dollar against the US dollar. Recent news has been dominated by the Reserve Bank of New Zealand's unexpected 50 basis point rate cut. This move has sent the Kiwi dollar plummeting to a 7-week low, as economic data shows subdued growth and inflation remaining under control. However, the US dollar is seeing gains across the board, fueled by hotter-than-expected US inflation figures and rising bets for a 25 bps Fed rate cut in November. Let's see how these recent events are reflected in the NZDUSD charts and discover key price levels to watch, potential trends and reversals, and ultimately, whether to be bullish or bearish in the short and long term. Looking at the daily chart, we can see a clear downward trend in NZDUSD over the past few months. The pair has been consistently making lower highs and lower lows. This suggests that the bearish sentiment is strong, and we can expect more downside in the near term. The current price is below the 200-day simple moving average, SMA, which is a crucial level of support for many traders. A break below this level could indicate further weakness in the NZD. The recent rate cut has pushed the price lower, breaking through the support level of 0.6100, which had been holding strong for the past few weeks. This suggests that the market is currently favoring the US dollar over the New Zealand dollar. The bearish sentiment is further strengthened by the fact that the Relative Strength Index, RSI, is currently below 50, indicating that the NZDUSD is oversold. However, there are some bullish signals that we need to consider. The NZDUSD has been consolidating for the past few days, suggesting that the downward momentum might be slowing down. The pair is currently trading near the bottom of the daily Bollinger Bands, which indicates that it could be ready for a bounce. The RSI is also starting to turn upwards, suggesting that the oversold conditions might be easing. A break above the 200-day SMA could signal a change in sentiment and potentially trigger a short-term rally. However, it's important to remember that the overall trend is still bearish, and any rally is likely to be short-lived unless there is a significant change in the fundamental outlook. Let's zoom in and take a look at the 1-hour chart to see if there are any more clues about the potential price action. The 1-hour chart reveals a clear picture of the recent rate cuts' impact on NZDUSD. The price has been steadily declining since the announcement, breaking through multiple support levels in the process. The 1-hour chart also shows a classic bearish engulfing pattern, which has been confirmed by the subsequent decline. This pattern signals a strong bearish move and further reinforces the overall bearish sentiment in the market. We can also see that the RSI is currently in oversold territory on the 1-hour chart, which indicates that the NZDUSD has been sold off heavily in a short period. The oversold condition might attract some buyers, but it's unlikely to trigger a sustained rally unless we see a change in the news and fundamental outlook. However, it's crucial to note that the price is currently below the 200-hour SMA, which acts as a significant level of support for intraday traders. A break below this level could indicate further downside and accelerate the sell-off. Moving on to the 15-minute chart, we can analyze the short-term price action in more detail. The 15-minute chart is particularly important for scalpers who are looking to capitalize on small price movements. While the overall trend is still bearish, there are some signs of consolidation on the 15-minute chart. The price has been bouncing between the 20 and 50 period SMA, indicating that there might be some buyers coming into the market. However, the RSI is still below 50, indicating that the bearish sentiment is still present. The 15-minute chart reveals some key price levels to watch out for in the short term. The level of 0.6100 acts as a strong resistance for the NZDUSD, and any attempt to break above this level is likely to be met with strong selling pressure. The support level of 0.6050 has been holding strong for the past few days. A break below this level could trigger further downside and accelerate the sell-off. The 15-minute chart is also a good indicator of volatility. When the price is moving quickly and the candles are large, it indicates that the market is volatile. Scalpers can take advantage of this volatility by entering trades in the direction of the trend. However, it's important to be careful with scalping, as the market can move quickly against you. Using stop-loss orders is crucial to manage risk and protect your capital. In conclusion, the overall trend for NZDUSD remains bearish. The recent rate cut by the RBNZ has weakened the Kiwi dollar significantly, and the US dollar's strength continues to exert pressure. The key price levels to watch are the 0.6100 resistance and 0.6050 support on the 15-minute chart. A break above 0.6100 could signal a short-term rally, but it's unlikely to last unless we see a significant shift in the fundamental outlook. A break below 0.6050 would likely trigger further downside and accelerate the sell-off. The daily 200-day SMA is a crucial level of support for longer-term traders, and a break below this level could indicate further weakness in the NZD. It's important to keep an eye on any news and events that could impact the NZDUSD. The next key event to watch out for is the US CPI report, which will be released on Friday. This report could have a significant impact on the US dollar and the NZDUSD pair. Traders should be prepared for increased volatility in the lead-up to and following the release of the CPI report. Stay tuned to explain the charts for further analysis and updates on the NZDUSD pair.